What's up, y'all? Be back with another video. Okay, yesterday we left off right at. Let's go. Let's review. Let's do daily review. Okay. Learned about a little bit of sticks by the downtrend. We learned lower low, higher highs. The uptrend, high, lower high, higher high, lower high. Consolidation is not a good trend. Indication is when a price breaks between a high or a low level. Indication is when a price breaks between a high and a low level. You're looking for that breaking point, then you're looking for it to stabilize itself. Indication can only happen when it's breaking above or below swing. High swings and low swings. Ask yourself, higher or lower? Okay, now we can resume back to. Oh, I missed one. ICC. Liquidity. Liquidity is basically us if we don't learn how to trade it. So I'm assuming that's what people are. Which is liquidity is that little drop in between. More consolidation. Typically, you want to trade between 1 hour trade swing and 4 hour long term swing. I'm gonna start there because I don't. Corrections happen after price. Okay, so this is what happens after we do the. After we do the consolidate, well, we don't trade. Indication after it breaks indication, then we do correction, waiting for it to restabilize itself. Corrections happen after price makes a new high or low. Sellers. Now we're back to the.
Alright, in today's video, I'm going to start a whole simple price action course on YouTube for free for you to understand what trading is. First of all, trading, to basically help you make it as simple as possible. Trading is where you buy at a certain price or sell. You can buy or sell at a certain price. And if price goes up, so let's Alright, welcome YouTube. Welcome to day 4. Basically today we're going to go over the continuation. It is the most important part to me because step 1 and step 2 are very important because they correlate into 3. You need step 1 and step 2 first before you can find 3. So the continuation is basically when price, after the correction is over, you're waiting for price to flip the trend and take it back up. So you're basically looking for a reversal using the higher time frame levels, but also using that 15-minute time frame to break down, or even 5-minute time frame to break down when price is actually reversing. So in best case scenario to explain it, you're basically using ICC inside of the trend that we're looking for. And I'm gonna explain everything today. Just make sure if you've been following this series on day 4, just make sure you guys subscribe and like the video, and also share it with somebody that also wants to get into trading in the most simple way as possible. And I'm going to deliver. So enough talking, get into the video. Also as well, if you want to see me call some of these plays live, then click the link down below to get into the chat. It is honestly free. So yeah, let's get into the video. All right, so now I'm upset. I recorded the first video and it was on my face the whole time and didn't get to see the charts. So I explained everything, and yeah, we didn't catch it. So now I got to re-explain, and that's okay. It's okay. But basically today is going to be going over continuation. Continuation is my entry model of how I get into trades. I'm gonna show you 2 trade setups that I just took recently, how I got into it, why I got into it. But first, you have to remember step 1 and step 2. So the indication and correction are very, very important, right? So let's get into it. First of all, we're going to go based off the 1 hour time frame, and we're gonna look at our levels. So notice how price is going up on this uptrend right here. So we have this uptrend, and we can see that price is remaining structure, keeping its highs and lows intact. So we have our support level here, support level here, support level here until it gets broken. This is where we start to understand that price is changing trends. Remember, if price is on an uptrend, it should not break its structure unless it's reversing. And what the correction helps you is from getting faked out on if price, because this could have been a liquidity grab, but what the correction helps you, or what the continuation helps you do, is realize that you need that second move down to. Let's get into it. Notice how price is going up on this uptrend right here. So we have this uptrend, and we can see that price is remaining structure, keeping its highs and lows intact. So we have our support level here, support level here, support level here until it gets broken. This is where we start to understand that price is changing trends. Remember, if price is on an uptrend, it should not break its structure unless it's reversing. Is where we start to understand that price is changing trends. Remember, if price is on an uptrend, it should not break its structure and
Please.
unless it's reversing. And what the correction helps you is from getting faked out on, and if price is on an uptrend, it should not break its structure unless it's reversing. And what the correction helps you is from getting faked out on if price, because this could have been a liquidity grab, but what the correction helps you, or what the continuation helps you do, is realize that you need that second move down to confirm that price is on a downtrend. And that's what we're going to explain today. So as we see this uptrend, we see that price ends up breaking that level and causing an indication. We have a new low, so we're going to mark this as a new low, new low. And remember, indications will always create a new high or new low, right? So indications will always create a new high or new low. So you shouldn't be confused on if price is, you know, on an indication or not. You shouldn't be confused if it's making an indication or not. Is it a new high or is it a new low? If it's not either one, it's not an indication. And remember as well, when it comes to
Mm.
it's not either one, it's not an indication. Indications will always create a new high or new low. So you shouldn't be confused on if price is, you know, on an indication or not. You shouldn't be confused if it's making an indication or not. Is it a new high or is it a new low? If it's not either one, it's not an indication. And remember as well, when it comes to finding these setups, you don't have to go 30 years back, because a lot of people, they look at their charts and it's like all of this. You don't need all of this information. Just look at the previous price action that's going on. Can you find the high or low? Most cases you will be able to find the high or low. So here we have our high, here we have our support. So here we have our low, right? Here we have our low, here's our high, right? And we can use this. We can even put this into the equation if you want to, right? So put this into the equation. And remember, since we have that continuation on our hands now in our strategy, and low, find the high or low. So here we have our high, here we have our support. So here we have our low, right? Here we have our low, here's our high, right? And we can use this. We can even put this into the equation if you want to, right? So put this into the equation. And remember, since we have that continuation on our hands now in our strategy, since we have that continuation, we're not going to take these buys because it only made the indication for us. It didn't come back above that level a second time. And you're gonna see a lot that, you know, waiting for that continuation above that level is going to save you a lot. So once again, remember, mark up your charts on the 1 hour or higher, right? So higher time frames only when it comes to marking up these levels, because they hold really, really strong. So let's break down some entries, right? So as we see here, we have this indication. It creates a new low. Some of you guys are probably asking if we go inside. So let's go inside. Some of you guys are probably asking, like, what do you think about this? Like, these are new lows too. How come you're just only choosing this one? Okay. For example, we can use these lows. It still applies, right? We have the indication, price corrects, and then under this level, it continues to sell, right? It continues to sell, makes a new low off of it, right? So also as well, something I want to explain, when price makes an indication and does the correction, the continuation, normally if price is trending in one direction, is normally the continuation is normally going to create a new indication. That's what you want. You want price to continue to repeat. So indication, correction, continuation, repeat. That's what you want the trend to do. So we can use that for people that kind of want me to show them that. So now we have a indication again, price corrects, and then we have another continuation. And then price makes a new indication, corrects, and then we have another continuation. Now, since we're trading on that lower time frame, so since this is basically a lower time frame trend, because on that 1 hour, we don't see that. That 1 hour, we just got that new low. After price made these two lower highs, we got that new low, right? But after that, notice how price starts to break structure, right? And that's mostly because the higher time frame is always going to take back control and it's going to be way stronger. But this new low is made, which caused this to grab as much liquidity as possible. So normally when price makes a new low or a new high, it tries to grab out those traders. So go back to video 1 and video 2 to understand what I'm coming from. Actually, video 3 should be the one. Yeah, video 3. Video 3 should be the one talking about this, but this new low cause price to want to go grab liquidity from all the people that have their stop losses above this level. Remember, this is our first time hitting these levels, right? Don't go all the way back and be like, no, it's not our first time hitting those levels. Currently, for current price, so since Wednesday, this is our first time hitting these levels. We're not looking back in the past. We're looking at what's happening this week, what's happening currently, what's happened in the past 5 days. So kind of use that for your basis. What happened in the past 5 days? You can even go, I would say 3 to 4 days. 3 to 4 days is all you need to look back, right? What happened in between there, right? So first time hitting these levels. So price is like, okay, there's a lot of stop losses that I can grab. They kind of got in on a breakout. They don't know exactly where price is going, but it's trending down under this level, but they don't know where it's trending to, right? So then price is like, let me grab those stop losses. Once it grabs those stop losses, it wipes all these sellers out the market. So this is their first time being at these new lows. But us, we're going to wait for the second time around, and I'm going to show you exactly how to break it down so you can get an entry. And also as well, I'm going to post my entries. So I'm going to put both my entries that I took in on this trade and the next one. I'm going to show y'all both exactly how to get into it. So also as well, when it comes to trading the indication, correction, and continuation, the indication, you want to mark that up using the 1 hour. So once again, go back to the videos. But fast forward, if you want to find an entry, use the 15-minute time frame or 5-minute TF, right? Time frame. So that's what TF means. Time frame. So use those time frames for entries, and I'm gonna show you why. So as we see here, price goes up on the correction. So we have our indication. So this whole move right here is the indication based off that 1 hour time frame. Indication, a new low. Indications will always create a new high or a new low. So now we have a new low. Price goes up on a correction. A correction is for grabbing liquidity. A lot of people ask, how do you know when the correction is over? Well, this is how, right? So what we're going to do is, since we can't see much here, but we can see price kind of stalling. The reason why I'm choosing this is because we can see here, price makes a little resistance and price is starting to not go anywhere. So normally I would mark the wick in this situation because we're using a smaller time frame. The 1 hour time frame wouldn't show that wick right here. It would just be the candle itself. So what I'm gonna do is mark that as my resistance, the wick right here. I now have a resistance. I now have sellers at this level pushing price down. What I'm gonna do is, since I can't really see too much, I'm gonna try to scale in one more time, see what I see. So now I see a little bit more than what I seen before, right? So notice how price here is building up this uptrend, right? This is normally what a correction is gonna do, right? So now we have a higher high and we have a higher low, right? So now what I'm gonna do is note these, right? So for beginners, please note these. Track your highs and track your lows. So note these. Boom.
My daughter is being treated for leukemia. It hit me hard. It did.
Right? So now we see that price is building higher highs, higher low, higher high, higher low, higher high, higher low. So back in video number 1, what did I say? If price breaks the structure, then you should either not be trading it and you should be watching it. So don't trade when it's not following the uptrend structure. So this uptrend structure, I wouldn't say trade it, but it is moving in one direction. It's on an uptrend. So we know it's on an uptrend. But then watch how price, so as you're tracking it, watch how price here starts to develop a whole new demeanor, a whole new setup, right? So we're going to spread that one across, and we have our high and now we have our low. So you can do the same one to all of these two as well. Track your high, track your low. As long as price is continuing to break highs. So if you can see here, one sec. If you could see here, price is continuing to break highs. So that's how we know it's on an uptrend. It's breaking highs, but it's not breaking supports. So then here, if we want price to go higher, it should continue to break highs, right? But here, when it was going back up to break its high, it failed to do so. So now we have equal highs right here. And equal highs is normally telling you like price is not trying to go any higher than this, or why did I put EQ, right? Put EH, equal high, right? So this is basically telling you price isn't trying to go higher, but it's also telling us it's not trying to go lower, because what did it give us right after? A higher low, right? So now we have a higher low and then an equal high, but price isn't going any higher. So now we know, okay, I'm not supposed to trade this yet because price hasn't fully, is not wanting to go up. And if it's not go up, if it's not wanting to go up and it's not wanting to go down, then I shouldn't be trading it because it's not trending. So even though we have that equal high, it's not going higher, we stay away from it. So then we continue to mark our charts out, right? So now we have this higher low. This is our new support since prices. Yeah, I got this right. I had to make sure it was higher low. Yeah, higher, higher, higher low. Yeah. This low is higher than the previous one. So this is our now new support, right? So now since this is our new support, we can be like, okay, price shouldn't be breaking up below here. So now it should push and use that momentum to make a new high. But what did it do? It made another equal high. So now we're like, yo, price is really not trying to go up. So if it would have maintained in this level and then pushed up, that still would have been good. But what did it do this time? Price ended up breaking that level of support and making a low. So now this is our indication, right? The indication. Sorry if I spelled that wrong. So now we have an indication right here. I'm not going to keep this for too long because it's pretty big. But now we have an indication because now price is telling us, hey, under this level, I have a potential to sell under this level. I'm bearish under this level. I'm trying to be sold under this level. There's not enough buyers to keep me holding up. That's the best way to explain it, right? Price is holding up. So even here, right? Here, buyers are here holding. Buyers are here holding price up. So it's not letting it break levels of support. Price can come back and retest this level if it want to, but buyers should not let this break through, right? Same way with higher time frames, it's just way stronger, right? So here, price says buyers are holding price up as much as they can, but if they lose strength, sellers are going to take control. So sellers are saying like, yo, we got some power to break out of here. Just it's teasing you, telling you like, yo, we have potential to break under here. So they're letting you know in advance, under here, we got control under here, right? Because buyers are getting weak, so we got control under here. That's what an indication is. So then after this indication, we have a correction in the market, which normally grabs liquidity. But what this helps us with is back on. So once again, go watch video number 1. The fundamentals are very important. Since we have equal highs now, right? Now this gives us a lower, us a lower high. And remember, back on video number 1, if price is giving a lower low, so this low is lower than the previous one, right? This one was high than the previous one, but now this low right here, this low right here is lower than this one. So now we have a lower low and a lower high. So this is now telling us, okay, perfect. Price is starting to build that trend, right? So what we can do in this situation, I'm not going to nitpick to the perfect position, but under this level, we can sell under this level with our stop loss above this previous level. Now, what some people would do is, since we're selling under this level, we're supposed to target this due to ICC, right? So under this level, we're supposed to have like this. But what people fail to remember is, don't go off that 5-minute structure. Go off the higher time frame. We're looking for price to reverse on the 5-minute time frame because the 1 hour has a new low and we're waiting for the 1 hour to stop correcting. But in order to do that, we have to dig deeper inside of the trend. So we have to dig deeper inside of the 1 hour to see what's going on. It's the same way with like being a doctor, being a surgeon. You need to go deeper into somebody's body in order to see what's really going on. So if somebody says they have a headache, what does the doctor normally do? They'll get more information about your headache, because outside it would show, okay, he's saying he has a headache. But now we have to go inside to see what's really causing the headache, right? So it's the same thing with trading as well. So price will show you, hey, I'm going on this downtrend, but then you have to go deeper inside to understand, is it going to continue or is it not? So you really got to, put that hand to hand. So anyways,
imagine being able to build an app with your name on it just by thinking about it. Meet Base 44, a complete AI creation platform. Describe what you want and watch it take shape.
With this, you need to use that 1 hour level. So that new low, which is down here off the 1 hour. So you would scale back out. Once you start seeing the confirmations that price is getting ready to sell again on that 5 minute or 15-minute time frame, you can do the same thing on a 15. The only reason we didn't do it on a 15 is because the 5 minute looked 10 times better, right? So then what you would do is see, hey, I got my entry level. Where's my TP? My TP is going to be that 1 hour level that we caused that new low, because that's where the indication is going to be at, or that's where the indication ended at, and that correction. And now we have the continuation. Now, what I always tell people is, this is pretty brand new for some people, right? But what I always tell people is, for the better entry, for a more safer entry for you, what you need to do is enter under that 1 hour level, because this level is stronger and has more momentum, because that's what caused this trend. This is what caused this new low in the first place. So notice how when price got to this level, that 1 hour level, it was a way stronger push here, right? Way stronger push when it was under here. When it was above here, it was like, yeah, it was kind of playing around. But as soon as it got under this level, it started having reactions. It started having those bearish reactions way stronger, right? So what you can do is the same thing. Price is under that 1 hour level. You already have your lower high here too as well, under that 1 hour level. And all you're looking for is price to push under this level. You don't have to really wait for that candle close. As long as you have everything back behind you, there's no reason why you should be getting faked out or anything. You waited for your second time around. Price is showing you is getting bearish. You have all the confirmations to show you that price is going lower. So we have more lower highs. So once again, a lower high here. Let me copy it. There we go. Lower high here, more lows being made, and then another lower high here. So okay, it won't let me just grab this. All right, there. And then we have overall price showing us it's getting lower, even under that level of support too as well, right? So that is the one level. So remember as well, when you're trading this way too as well, you're normally going to trade trends off that higher time frame. So overall, bearishness is what is causing the trend. Because remember, if you want to draw a little trend line too, if you want, this uptrend is now over. We had the characteristics to show us now it's over. So now we're trading based off the trend. And this is where you as a trader start to make decisions if you want to hold longer, if price is showing that it's going to continue, right? So now we have a new low. So what this causes is a new low. And no, you're not going to get off at the perfect time, but just look at those characteristics. So as this happens, as this drop happens, watch this, right? You would once again scale back in to see more information. The 15 minute was showing a little bit, but the 5 minute kind of shows better, right? So now look at this, right? Our normal TP would have been this level, this new low, right? But since price surpassed it, we actually got way more out of it, and price is still going down. Price is still building structure down and it's still going down. But watch this, right? So boom, we have price here make a support level. So here we have a support level. And then here we have a high level, right? So we're already past our TP, right? So everything from here is how we treat it, right? How we treat it. So we have our high, we have our low. Price is still kind of equal high here. We have an equal high here, and then price ends up building a lower high. So now we have a lower high. So now we have our second lower high. So that means anything that breaks above here will start an uptrend, because price should not break a lower high if it's trying to go down. So if price is trying to go down, it shouldn't break these levels. So once again, go back and watch video number 1. Price should not break its structure unless it is reversing. What we start to see here is price makes that lower high, and then it also makes a higher support. this is what we don't want to see. So now we don't want to see price make higher supports. So then we can either exit the trade here. We can exit the trade here and be like, okay, that was our trade. You can go based off that, and we'll wait for our next setup. So notice how price starts to build this uptrend. Like I said, if price breaks above here, it's going to start that uptrend, and we start to see here. But then notice this, right? So this is what I explained in the first time I explained it, but the video wasn't recording. Let me make sure I'm recording this time. Yep, you can see me. Yep. So watch this, right? People will say this, right? We have price building up, hasn't broken the structure, retesting supports, and then we have this right here, right? So we have the support here, makes a new high, corrects, and then price starts to maintain this level right here, so it doesn't go any higher. So then you would have drawn your support and or your high and your low. Excuse me. You would have drawn your high and your low, and you would have been like, okay, it broke to the downside and gave me an indication. What did I say, right? You're not supposed to, because some people would have just sold based off, oh, you said if it's under a level of support, you're supposed to sell, or whatever the case might be. But remember, your first two steps will save you from getting into fake out trades, right? It will save you from getting into fake out trades. This is price grabbing liquidity. So now it calls sellers to get into the market just to wipe them out, right? And then remember again, right? Boom, here we have a indication above this level. And I'm not saying take this trade, but I'm just saying how, you know, that second time around will most likely save you and get you into a better trade. And instead of trading that breakout, right? I told you throughout this whole course, I'm gonna show you examples of where every step is going to save you from something. So now we have an indication above this swing high, above this level, it makes a new high. So our indication, price corrects. What is a correction? Corrections happen to grab all the breakout traders and grab liquidity from those people and then continue later on. So now we have price grabbing liquidity, tries to break that structure to confuse people, to grab all liquidity as possible, and then continues back above this level, which you could have traded off of, back above this level and targeting that high. So targeting where the indication came from, right? You could have did that. Not saying I did that, but I'm just saying you see how ICC plays a part. So now overall, we're looking for those sells and we're waiting for price to change trends, right? Here we don't see price trend down, and we continue to follow this uptrend. And then price gets to a certain point where it makes a high. So now we have a high here. And then where's our support? So our support is what caused this high, right? So what caused this high, and then our high. And then you start to see price break under once. This doesn't mean we sell yet. Just because we're looking for sales and price broke down once doesn't mean we sell. What confirms it is once we have our high, we have now a new low. So our indication, you see price correct, make a lower high. So this shows us price doesn't want to go higher than the previous one. So now we have our indication, our correction, and price continues to go back under this level. And what we can do is, once again, target here or put our entry here under this level. So we're selling when price gets under this level, and then we can put our stop loss either here, or you can put your stop loss back above the level that was created. Most of the times you want to use this one because your overall needs some room for your trade anyways, especially trading NASDAQ. And then what are you going to do? You're going to scale back out to that 1 hour time frame, and you're going to target where the whole indication started in the first place, which is this new low. And then overall, once again, I'm going to put my trades back up here and show you that I've taken these trades, and overall you can see how I enter. So overall you'll be looking for this as well. And that is the continuation. That's the entry model that I use. It works efficiently, as you can see. And yeah, if you have any questions, let me know. Comment down below. I can't help you if you don't comment.
I dare you to let me build you a completely free e-commerce store preloaded with 20.
All right, guys. So today we're going to get into talking about market structure and overall reaction levels. So market structure is going to play along into reaction levels, but I want to show you everything
just firsthand of how my mindset is. I'm not really going to look too far back. I'm just going to show you how you can look at the market from this way and, find those setups. Because a lot of people ask me, how do I find my setups? Everything else is super easy. The entry is easy. I already explained that. Knowing when the correction is over, I've already explained that. So you need to go back and watch those videos over and over and over and over and over and over and over until it clicks in your head. Later on down the line, I'll give more examples as the day progresses, but I kind of like to show you what's happened, what trades have I taken, so that way it makes more sense. So right now I haven't taken any trades because what I'm going to explain in this video, right? So the first thing I want you to remember is the fundamentals. So if we have a high and we have a low, so if we have a high and then we have a low, right? These levels have buyers and sellers. So in this case, up here in this level, there are going to be sellers, right? Sellers, because this is the highest point that price can get to. That's why it's called a high, the highest point it can get to. And remember, fundamentals, you have a high and then you have the higher high, and then you have a higher high above that, right? And then you also have a lower high, which is meaning that bears are coming into the market, right? So we have buyers and then we have sellers too as well. So right here, and then we're going to put buyers, right? And what this essentially means is that when price gets to its lowest point, that's letting you know that buyers are stepping into the market to drive price back up. It wants to drive price back up because this is the level that they feel like purchasing their stocks and then taking it back up to the highest point, right? And if people are, if it's getting lower and lower, that is the amount of sellers that are coming into the market selling their shares at certain levels or selling their stock at certain levels. I trade NASDAQ. That's pretty much what I've been doing for 4 years, because I know people ask, what am I trading? What do you trade? What do you trade? I guess some people don't have common sense. Like, once again, I know I'm gonna go off topic, but a lot of people don't have common sense to kind of think for themselves. So there's some questions that I see that you can easily Google or you can easily chat GBT something. I'm just simply showing you how I trade. You can figure out, oh, how do I calculate pips, or how do I do this, or how do I do that, in the terms of like, oh, should I get TradingView Premium? Like, bro, you're asking the wrong questions. You're asking the wrong questions. So anyways, back to this. Buyers at a certain level, they're going to drive price back up, and then sellers, they're going to drive price down because they're selling their shares. With this being said, how I like to use the high and low levels, most people think I'm trading breaker retest or just support and resistance. I don't think in that mindset. You might view it as that because we look at the charts differently. You might view it as support and resistance, break and retest. But there's things that I've seen where break and retest, how I've seen it and how people project it, is not the same way with how I trade, because break and retest is coming back out to that same support. So let's say price breaks and then it retests this level and then goes back down. That's break and retest. What I've seen is price liquidates everything, comes back, and then later on down the line, it'll come back below that level. That's not a break and retest for me. I don't see that as break and retest from what I've learned, right? So anyways, we have buyers and sellers. What I like to do is I like to think of it in a sense of, at this level, buyers have the most control, and it's like a brick wall in a sense. Price has a brick wall, and it's not letting it go any lower than this. So if this is the case, anything above a low, a swing low, so anything, okay, we can write this down. Anything above a swing low equals potential, I don't know if I spelled that right, potential bullishness, right? Bullish, potential bullish, right? Vice versa, anything below a swing high equals potential bearish, right? And I like to think in this way because then ICC plays a huge part in how I should be thinking now. If I know price at this level has potential to be more bearish, and I know above this level price has the potential to be more bullish, think about this, right? So pause, take what I'm saying in, take what I've just said. I'm gonna repeat it one more time. Anything above a swing low, higher time frame, 1 hour, 4 hour, daily. Anything swing lows, swing highs. You should be looking for your swings on your 1 hour, 4 hour, or daily time frame. Really, you can do 1 hour and 4 hour. Those are the keys right there. Those are keys right there. Use that 1 hour, use that 4 hour. Watch how it changes, right? Watch how it changes your trading. But take what I just said. Anything above a swing low and anything below a swing high, they either have the potential to be bullish or bearish. The exact way I have it right here. So screenshot it, whatever the case might be, do it how you need to, however you need to learn it, right? And then this plays a part because then when we look at actual price, when we look at actual price, oh, I can't even drag this over. Let me go ahead and delete this. Let me like move this out the way. Boom. So now when we look at actual price, everything will start to align with you and it should make sense. If it doesn't make sense right now, man, I don't know, bro, because I'm explaining it on a kindergarten level, right? So if we have this swing high, price comes up, resistance, sellers kick into the market, right? Sellers kick into the market, they're trying to drive price down. But then price is like, no, I don't want to go down. I want to keep going up. So it makes higher support levels, right? And then we have this push up, right? Remember, at this high level, there were sellers holding price from going any higher than this. There's sellers that was sitting at this level, same right here, that same push down. Sellers were sitting here at this level. Sellers, I gotta type it out for some of you guys. Sellers are sitting here trying their best to drive price down. But once again, go back to the fundamentals, like episode number 1. Remember, if price is on an uptrend, it's going to start creating higher lows in this situation because the supports are getting higher, which means price. Episode number 1. Remember, if price is on an uptrend, it's going to start creating higher lows in this situation because the supports are getting higher, which means price is. Episode number 1. Remember, if price is on an uptrend, it's going to start creating higher lows in this situation because back to the fundamentals, like episode number 1. Remember, if price is on an uptrend, it's going to start creating higher lows in this situation because the supports are getting higher, which means price is getting bullish, right? So now this is our next support. So this is telling me buyers are trying to drive price up at this level, right? But that's the least of your worries. You need to focus on the sellers that were here at this point. And now look at this. Price has broken out and pushed up and made new highs. So this lets me know that sellers at this level are no longer in control of the markets at this point. They've gotten swept out by the new buyers in the market, and the new buyers are coming into a new point of sellers. So now they've reached another boss, another level of sellers. So the market will then liquidate liquidity. Liquidity just means grabbing money. Keep it simple. Don't fucking use all that extra BS to understand liquidity. Liquidity is just grabbing more money. They see this fucking Chanel bag. They can't afford it right now. So what are you going to do? You're going to go find some fucking money. You're going to make some fucking money. And then you're going to come back to the store and buy the bag. And then another bag comes out and you're like, shit, I don't have enough money for that bag. So what are you going to do? You're going to go grab some more money, go make some more money, and then come back and get the bag. It's the same thing, right? So the market sees there's more sellers. They're at a higher level of price. what is price going to do? It's going to liquidate the market because there's so many new traders. You can't even see what I'm pointing at. There's so many new traders at these levels. There's so much money at these levels that people might not have stop losses, might have a short stop loss. There's so many stop losses that it can take out to liquidate the markets, because when you make money from the markets, you're actually stealing from it. The market doesn't want you to steal from it. It wants you to lose so they can collect that money, because they're going to collect the money that you lose. So it's trying to push down and liquidate these people, make them lose, make them think, oh, price is going to sell off now, so let me sell. So now they're selling too. So once price reaches a level, it starts selling off. And then people then think, oh, price is selling, so let me get in sales. And then they get into sales. And about the time they get into sales, remember that higher low level, right? Price is not trying price. If price is truly in an uptrend, and we've already seen the signs, right? We've already seen this breakout. This shows us the signs that price is getting bullish, right? Price is not going to break this level though. But most people are not going to know that. They keep thinking in a mind of greed, a mind of abstinence, a mind of deficiency, because they're like, I need to get money, I need to get it now. So they are going to try everything without using the proper knowledge, the proper mindset of future terms of where price is going to go. So both of these areas right here are normally people that FOMO, greed. This is FOMO and greed. This first move up is FOMO and greed. And then this second move down is revenge trading. Bro, I can't spell revenge. And FOMO.
No other healthy meal service is doing it like Factor. I've tried what feels like every plan there is, and
the reason is because most people FOMO on the breakouts. They don't want to wait for a clear direction of where price is going to go. And then they're super greedy because they feel like they need to be in on this breakout. They feel like they need to do this. They feel like they need to trade off this breakout. They're not thinking long term. They're not thinking in an aspect of an actual trader. The people that you see on Instagram that are taking these small little scalps, yeah, they're making a little bit of money, but I'm telling you, the game will change for you when you switch to this higher time frame and start thinking of your plays longer term, like taking it day by day. But also you can take a trade in one day and then be able to hold for the week, and then you'll make more money that way. You won't be having these consistent losses because you're taking 30 trades a day, bro, or 30 trades a week. So you don't need, every movement shouldn't be your movement. Every movement should not be your trade, bro. You need to take the movement in and understand that this is a part of the trend long term. You need to understand that this is how price is going to move long term. If you're trading that higher time frame, it avoids all the noise that people are showing you on Instagram and social media in general. It avoids all that noise. You avoid all the noise, and you make more money when you switch to a mindset where you're thinking long term of where the market is going long term. We are trading economies. We're trading governments and all types of news. We're trading how the world is working. So if you think something is going to happen in the world long term, and if you're looking at your charts and you're seeing it long term, why are you trading every 15 minutes? Shit happens every other month. Something new happens that you could capitalize off of, right? So why are you trading in a way where you feel like, oh, I'm gonna just trade this one day and then I'm gonna trade the next day and I'm looking for something different? You trade on Monday, you're looking for buys, and then you trade on Tuesday and then you're looking for sells. No, stick with one thing, trading that higher time frame, and the higher time frame will show you you're trading buys and sells every single other day, but long term, I'm just going straight down and you're just trading me up and down, right? Sorry, I get a little angry because people like the things that y'all see on social media is not true, bro. And it's so annoying because it's just not true. But anyways, FOMO and greed, which causes the market to push up in these levels. And then the revenge trade because they've lost off these buys. Sellers kick into the market and kills out their trades, and then they start revenge trading and then FOMOing because they think price is gonna sell long term or however they're thinking, and then price and then which causes them annoying because it's just not true. But anyways, FOMO and greed, which causes the market to push up in these levels. And then the revenge trade because they've lost off these buys. Sellers kick into the market and kills out their trades, and then they start revenge trading and then FOMOing because they think price is gonna sell long term or however they're thinking, and then price reaches a level where it cannot break because it's holding up strong using those higher time frame levels. And if it does break, that just shows us that the trend is changing in another direction, or most likely trying to grab liquidity out of the market even more to kind of stop you out, or to stop the other people out. And then we have that second move up. Remember, since we're talking about reaction levels, I want you to remember above this level, remember who was here, right? So under this level, we don't want to trade under this level, right? So we don't want to trade under this high. The reason why we don't want to trade under this high, because it does have the potential. Once it's back under here, it does have that selling potential to sell off. It does have that potential. So we don't trade that. We don't try to touch that. We wait for that market to get back above a level where we know price is going to have that momentum back to another level that it came from before. So we know price is going to have that same momentum. We see that price is going to have that same momentum. So whenever we trade, we're going to trade based off the momentum and the reactions that we have. Price is going to move with that volume, and you're going to look for price to, and this is just an example, you're going to put it under that higher low. But remember, back in the last video about entries, I showed you exactly how to get an entry. So you should not be asking me how to get an entry. I've already explained it. Go back and look at the other video. I explained exactly how you can get an entry, right? So with this being said, I want you to look at this way. And remember, reaction levels come from those highs and those lows. The highs and lows falls back into this. Here's your high. Right? And then here's your low. Back above a level where we know price is going to have that momentum back to another level that it came from before. So we know price is going to have that same momentum. We see that price is going to have that same momentum. So whenever we trade, we're going to trade based off the momentum and the reactions that we have. Price is going to move with that volume, and you're going to look for price to, and this is just an example, you're going to put it under that higher low. But remember, back in the last video about entries, I showed you exactly how to get an entry. So you should not be asking me how to get an entry. I've already explained it. Go back and look at the other video. I explained exactly how you can get an entry, right? So with this being said, I want you to look at this way. And remember, reaction levels come from those highs and those lows. The highs and lows falls back into this. Here's your high. Right? And then here's your low. Right? So if price is above a high, that lets you know that sellers are not in that market. They're not above that level, right? Sellers are not at that level. So take a screenshot of this if you need, right? Take a screenshot. I'm gonna pour this over a little bit. Take a screenshot of this if you need. I'm gonna move this out the way. I'm gonna give you a couple seconds, right? I'm gonna go ahead and put entry so you can kind of understand. Entry level. Your entry should always come from where price initiates the bullish momentum. So that means the bullish momentum starts as soon as price is above this level. So when we take our entry, it should only be where that bullish momentum kicked in the first place, right? And then your stop loss should be at a level where it has that. So you see here where we have that higher low. Price is going to make another higher low based off the trend. It's going to make another higher low. Once again, go back to the fundamentals, looking at uptrend fundamentals, and then you can see that price will build that higher low. And I've already shown you guys how to take an entry. So once again, go back and watch that video over and over and over and over until it makes sense, right? But yeah, you would scale down to that 15-minute time frame to find that entry, and you will take price back up, right? And it's not that simple. It looks simple, but it's not that simple, because you really have to analyze and understand the markets itself, right? Before you can just make it look like this, right? So I'm going to show you what my mindset is right now on a current chart, and then I'm gonna get out your hair, right? So go ahead, once again, take a picture of this if you need, right? Pause the video, whatever you need to do, right? So remove this, and then we're gonna bring my chart back. Yeah, I get so angry thinking about just everything that y'all have learned, right? So 1 hour time frame. First thing that I notice is that price has this high area, and then it starts sharply going down. So now I'm pretty interested, because in my head, I know this big move down has caused something to break. It's broken something. And I'm not saying that just because I can see it already. I'm saying it because this is the first thing that points out to me. This is the highest point. Also this low over here, but I can see that current price is all the way up here, so I'm not too focused on it, right? So the first thing that I'm going to note is that price has this high. And then I'm going to ask myself, what caused this high? How did price push up and cause this high? So then obviously I know now that I have this low level right here. So now when I'm thinking about this, this goes back into my entry that I had last week, this high and this low. So now we have this high, and we also have this low, right? So now we have the low and the high, and obviously we have this one that was a high too. So this was that indication for price to be bullish, right? So once again, this is that indication for price to be bullish. But the reason why we didn't get into that trade is because why? We didn't have our second push back above that level, right? Even here, right? Price tried to push up here. Why didn't it push up there? Why didn't it push up there? Or why didn't it push above? Because remember, sellers are in control below this level at all highs. You can draw this at any high that you have. Sellers are at that high, and then it's trying to push price down. And remember, buyers are at this low. So now we have buyers sitting at this low. Let me make sure I'm recording, bro, because sometimes like I'll be talking. Yep, video's still on. Okay, good. Buyers are sitting at this low, so they're trying to push price up. So now, oh my goodness, trading is like, if you just actually fucking think for a second, like if you actually calm down and think about it, it's actually simple as possible. The way that I'm explaining it is simple as possible, right? So buyers are sitting here pushing price up. You can see price have that momentum to get driven up. But the moment price breaks this, remember, there are no buyers at this point, because price is obviously breaking through it and causing a new low. So now it's causing a new move, a new momentum, a new reaction back down to these levels, right? So now we know anytime price is under this level, it has the potential to drive down to this level. And if we drag this over here, look at the, oh my God, bro. Bro, there's no way that you don't understand this after the 60 days. If you don't, bro, I'm sorry to say this. I'm actually sorry to say this, but if you don't understand this after all 60 days, you are a fucking dumbass. I'm sorry to say this, right? So, all we did was mark up the high, understand where that high has came from. So here, understand where that high has came from. And then we looked over here and we seen price break that structure. So this lets us know under this level, price has the potential to sell back down to this level. This is our indication. Here's our correction and the continuation back under this level to take out this low, cause a new indication. This indication has a correction. It has a continuation that stops right at these levels, even though price was here, stopped here, but it's still good because there's buyers at this level. They must have came in a little bit stronger, They take out. Now this is the part where you need to start thinking more about reactions itself. So look at the same level that we're going to drag all the way through this high, right? This high, remember, sellers are sitting at this level trying to push price down. So every time price comes into this level, that means buyers have to be stronger than the sellers in order to come back above this level, right? So if price here has sellers, once again, if price is here and has sellers at this level, it cannot be considered a bullish trend until price breaks out of a level where there are sellers holding price up. Right? If sellers are pushing, or I don't know why I said up, it's holding price down. So if sellers are sitting here pushing price down, even this break here, everything was this right here was all because the previous news that has came up and all the fake news and all that. That's just the markets. You're not going to get it right 100% of the time. But if you think about it in a market structure perspective, look at this. Right? Look at this. We had a new low, price pushed up, price pushed up, made a lower high, pushed down, and then broke it. So now we can think in a mindset of like, okay, now there is on the 4-hour time frame a higher high, I guess you could say. Yeah, a higher high. Price could potentially be making a higher low to progress later on, or you can just sit on your hands, wait for price to do its thing, and then later on show you, okay, this is the direction I'm going. But that's what the 4-hour looks like. When we jump on the 1-hour, we can see that price is getting lower. The lower highs are getting lower. And we can see that price is progressing down under those levels that we've already established as price being where the sellers are going to be in full control of the markets under. So notice how under this level, price has full potential to sell. Price under this level has full potential to sell. Price comes into this level, full potential to sell. And then here we're back under this level, so it has full potential to sell. Same way with this level. There's buyers that were sitting here. They pushed the markets back up. And then the moment price broke through, it made a new low. The moment price broke through, it made a low. The moment price breaks through this level, where do you think it's going to go? If price breaks this level, where do you think this low is going to go? And with that being said, I'm just going to keep it as that. I really hope you guys understand it. Break level, the moment price broke through, but this level, there's buyers that were sitting here. They pushed the markets back up. And then the moment price broke through, it made a new low. The moment price broke through, it made a low. The moment price breaks through this level, where do you think it's going to go? Price sitting here has level the low. Price could potentially be making a higher low to progress later on, or you can just sit on your hands, wait for price to do its thing, and then later on show you, okay, this is the direction I'm going. But that's what the 4-hour looks like. When we jump on the 1-hour, we can see that price is getting lower. The lower highs are getting lower. And we can see that price is progressing down under those levels that we've already established as price being where the sellers are going to be in full control of the markets under. So notice how under this level, price has full potential to sell. Price under this level has full potential to sell. price comes into this level, full potential to sell. And then here we're back under this level, so it has full potential to sell. Same way with this level. There's buyers that were sitting here. They pushed the markets back up. And then the moment price broke through, it made a new low. The moment price broke through, it made a low. The moment price breaks through this level, where do you think it's going to go? If price breaks this level, where do you think this low is going to go? And with that being said, I'm just going to keep it as that. I really hope you guys understand it and, just be able to take trades based off what my knowledge that I'm teaching. It's very, very simple. You just really have to do this for 4 years.
Buying and selling in currency pairs. What is Forex trading? Forex trading is the simultaneous
Yo. Tired. what I would do is I would sell here because you do a lower high right here, and then you set your stop. So the sellers obviously don't. Obviously, two sellers and buyers push back into. I understand it. I don't know if you guys understand, but I understand. And as you can tell, it's not breaking that support, not resist. He called it something. I'll remember. Sellers. This is the sellers and buyers can't go anywhere, and it's not breaking. And that new support, and it's still not breaking. And it's still not breaking, so it's not going to go any higher. After your second time analyzing it, I would go ahead and sell it, and then wait. Boom, cashed out. 100,000 in the bank. Give that back.